Did you hear what Trump said? What we are doing is very big. But when it comes to his tariff, one word to sum it up: chaotic. Hey everyone, I'm June, a researcher with Dxpert. The financial markets have been on edge, shaken by President Trump's unpredictable economic decision. Before the election, he vowed to supercharge growth and send the stock market soaring. Instead, his policies, tariff and fiscal tightening, have triggered potentially higher inflation and slower economic expansion. Despite the turbulence, Trump reassured Americans that the disruption would be short-lived because what we are doing is very big. We are bringing wealth back to America, that's a thing. But is it really? In a dramatic move on Truth Social, Trump announced new tariff aimed directly at Canada. His reason? Ontario has imposed a 25% tariff on electricity exports to the US. In response, Trump doubled tariff on Canada's steel and aluminium to 50%, calling Canada one of the highest tariffing nations in the world. The policy was set to take effect the very next morning, on March 12th, albeit Trump changing his mind again later on. While some countries like Canada, Mexico, and China responded with retaliation, others chose a different path. Take Australia, for instance. When the US imposed a 25% global tariff on $1 billion worth of Australian aluminium and steel, Australia's Prime Minister dismissed the idea of fighting back. We can't do much damage to the US because they don't buy that much from us. If we retaliate, we will only end up hurting ourselves more. But Trump isn't stopping there. He has promised additional tariff on foreign cars and reciprocal trade penalties starting the 2nd of April. Now, here's the big issue. The full effects of this tariff haven't yet hit the economy yet. The most recent economic data have yet to reflect the consequences of these policies. Most economists agree Trump's tariff will raise prices for American consumers as businesses pass on their rising costs. Unlike his campaign pledges, these tariffs are sweeping, impacting nearly all US trade partners with very few exceptions. As a result, analysts have revised their forecasts. The CPI is projected to climb back to 3% by the third quarter of 2025. PCE and core PCE, which are key inflation indicators, are expected to stay high, making it harder for the Fed to justify interest rate cuts. Even the Commerce Secretary, Howard Lutnick, has warned of a major price shock for imported goods. So, with all this uncertainty, investors are nervous. If the Fed delays rate cuts due to persistent inflation, we could be staring down a recession in the coming quarters. History offers a clear warning. During Trump's first term, a recession hit just one quarter after tariffs were implemented. The stock market only rebounded once negotiation improved and the Fed started cutting rates. Now, the labor market data is also flashing warning signs. Government payrolls have contracted, especially at the state level, possibly due to hiring freeze and voluntary resignations. Unemployment inflows have remained steady, but outflows where worker transitions back into jobs are slowing. If this trend continues, we might be seeing a policy-driven downturn and engineered recession. A slowing job market means lower consumer spending, which in turn drags down economic growth. Let's break it down from a technical perspective. Looking at the S&P 500, prices are currently hovering around the 5,600 range. With uncertainty looming over tariff, inflation, and interest rate, we are likely to see prices fluctuating within key zones, aligning with S1 and S3 on the quarterly pivot points. However, there's still room for a bullish breakout, only if inflation remains stable and tariff doesn't cause too much damage, and the Fed follows through with the expected rate cut in June, or possibly of tariff negotiations leading to reversals. We could see a break above S1 and a rally past the pivot level, signaling a return to bullish momentum. For now, 5,700 to 5,400 are the levels to watch. A drop below 5,400 could indicate a deeper sell-off, and a break above 5,700 could mark the start of a change in sentiment. So, where do we go from here? If history repeats itself, market may face short-term turbulence before stabilizing. Trump's tariff decisions are shaking up the economy, but they also create opportunities for those who know how to navigate them. As always, staying informed is key. What's your take? Do you think we are heading towards another market crash, or will the Fed and policymakers manage to stabilize things? Drop your thoughts in the comments below. If you found this analysis helpful, make sure to like, share, and subscribe. And for quick access to all our insights, just scan the QR code on your screen.